Be Wealthy and Smart, episode 1630.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about inflation is running hotter than expected, and this caused markets to sell off sharply. It was January's Producer Price Index, which is a measure of wholesale inflation, which showed a 0.5% increase for the month, but economists polled by Dow Jones saw the headline reading coming in at only 0.3%. But more concerning, perhaps, is that the core Producer Price Index, or PPI, which excludes food and energy prices, recorded a 0.8% gain, which was much more than the 0.3% rise that had been anticipated. Chris Zaccarelli, Chief Investment Officer at Northlight Asset Management, said, regardless of whether we see better than expected earnings, more tame inflation, or a resilient labor market, people have been selling first and asking questions later. This morning's higher inflation data is one more thing to worry about within the traditional economic analysis of price stability and full employment, even before investors factor in the disruptive potential of AI's impact on the economy. The Nasdaq is on pace for a decline of more than 3% in February and its worst monthly performance since last March, when the president announced Liberation Day, and this looks to me like a similar echo to last March. The S&P 500 is on track for more than a 1% loss in February, and the Dow is on pace for a 0.3% decline for February. Some of the sell-off is due to mounting concerns about the impact of artificial intelligence, or AI, on specific industries and the overall economy. Those fears were exacerbated after Jack Dorsey's fintech company Block said it's laying off more than 4,000 employees, or nearly half its workforce. Stocks in the financial sector and other areas of the market tied to the economic cycle pulled back sharply on the news, including some software names which are also concerned about AI disruption to the industry, like Salesforce, which tumbled more than 3%, Microsoft, which lost more than 1%, and cybersecurity company Zscaler, which shed 15% after it missed second quarter expectations, and CoreWeave fell 18% on disappointing guidance about future revenues. Nvidia also saw a 2% fall, following a 5% decline the previous day, which came as a surprise to many investors. Some people attributed the decline in Nvidia to doubts around its deal with OpenAI, weak sentiment over the AI trade, and concerns about whether hyperscalers' lofty AI capital expenditures are sustainable. Hyperscalers being large tech companies like Microsoft and Google, etc. So with the Producer Price Index coming in hotter than expected, this adds concern that inflation is looking a bit sticky. And that is troublesome because the Federal Reserve, of course, looks at inflation numbers as one of the indicators to adjust interest rates. This administration has called for lower interest rates, but it's difficult to get lower interest rates when inflation is running hotter. And because higher inflation numbers can mean higher interest rates, that adjusts all stocks lower because it's anticipated that profits and profit margins will be lower in the future. Conversely, if we saw inflation becoming weaker, it would show us a path to lower interest rates in the future, which would cause people to be more optimistic and would generally cause analysis of future stock market profits to rise. But we have conflicting information too, because if we have higher inflation numbers, but we are experiencing more layoffs due to AI taking over what were people's paying jobs, then we could experience in the future a very weak job market and overzealous inflation. And that's not a good scenario for the Fed to have in order to adjust interest rates. So we'll continue to monitor the situation and report back as it unfolds. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.